Good evening, everyone. Tonight is the regularly scheduled Finance Committee meeting, May 19th, 2025, and the time is 6:52. On the committee, we have Councillor Beck, Councillor Dean, Councillor Fournier, Councillor Trumbull, and myself, Chair of this committee. And we also have joining us Chair Pelletier, and at the table we have City Manager Deb Ward. I think first on the agenda tonight is bid, and Brad Wall is here.
I'm gonna go ahead and start it if that's okay. Sure, so Brad Wall, True, is our business development person and manages the oversight, the maintenance and operation of the main business enterprise park. As you may likely know, we have a lot of open space. So one of the things, and we have tenants, so one of the things we need to do is ensure that everything is mowed. So we went out to bid for mowing services. We typically do a 3-year contract. Oftentimes they have an opportunity to renew for an additional 3 years. We were pleased. We received 9 responses to our request for RFP, ranging from the low of 28,400 to a high of 100,000 for a season. So we typically look at a low bidder. We did our due diligence. While we don't have any personal experience, we did call references. All of the references were very favorable. So the recommendation is to award the 3-year contract to 207 Property Maintenance and More LLC in the amount of $90,970.
Any questions? Councilor Beck?
Public Works didn't have a mower, they could just run Brad, so he could just get up there and do it himself.
I'm not sure that's what Brad's looking to do on a given day, especially this time of year. You gotta dodge the raindrops.
Hey, would move approval.
Second.
Like to mention, Councilor Leonard has joined us.
Do you want me to keep right on going? All right. So the second bid is the Union Street resurfacing. So this is a project that will resurface Union Street from Griffin Road to Davis Road. I think I'm doing that from my memory, so hopefully I'm doing it right. Yes, I did. So it will also replace curbing and sidewalks, which is typically what we do when we do paving projects now. We used to do sidewalks separate than roads, and what we found is the two shall never meet, so we make them all part of the same project. This is a project that 90% of the funding comes from MDOT, and there is a 10% local match. And it is referred to as a local program administration, LAPA. And so we received 3 bids. The recommendation is to award to recommend that you recommended the city council to award the contract to the low responsive bidder, Hopkins Paving LLC, an amount of $649,021.40.
Any questions? Councilor Fournier?
No question, I was gonna make a motion.
Oh,
Second.
okay. Okay, so now we're moving on to another.
Yes. So our last bid this evening is an emergency repair on our building 600 hangar door. So for those of you who go along Audlin Road, and I'm not doing a shout out, but across from the ground round, you'll see the building up there that sits up on the hill. That is what's referred to as building 600. It is obviously a surplus from the military days. One of the cables that lifts one of the doors has failed. We've been babying this particular facility on for some time. It can no longer be babied, and we need to replace the door. And you might say, why would we want to do that? Well, that's actually the space that we house a lot of our equipment in for our cargo operation. So getting our equipment in and out is critical to our ability to do that service. So what we ended up doing was getting 3 quotes from vendors. The quotes ranged from $450,000 to $675,000. Again, the lowest quote came from a Chili's Contracting. Again, a vendor that we were not familiar with, but we went out and did our reference checks, all of which came back positive. There are savings in the Monte Moose parking lot project that we would repurpose for this. So the recommendation is to authorize the execution of a contract. Recommend to the city council to authorize the execution of a contract with Chili's to get the door replaced, the hangar door replaced.
Any questions?
Just a quick, I mean, these bids aren't really, even close, but I'm assuming none of these vendors are local.
I believe Chili's is referred to as somewhat local for
Oh.
some reason. It's just not.
We didn't get a bid tab. Right?
No, because there wasn't an official bid. We
Yeah.
just went out and got, the staff went out
No,
and got.
big deal. I mean, they were,
Yeah.
even if they weren't, it's quite a difference in prices.
Do we have a motion?
So moved. Second.
This will go to council on the 28th.
Yes.
Approval. And then we have interim financials. For the
Yes.
third quarter.
Yes. So you see your general fund revenues and expenses for the quarter ending March of 2025. Typically what we refer to is we do look at any of those who have a variance of 10% or more. Just want to point out that I know taxes is always going to have a variance of 10% or more. Under accounting rules, when you issue the property tax bills, they become revenue regardless of whether or not the payment is March or September, so that always appears. License and permits are also slightly above estimates. That is a lot to do with vitulers, liquor license, building and electrical permits. A lot of this is being driven by building permits and marijuana licenses at this point. Fines, forfeits, and penalties are up quite a bit. That is because all of the vacant property fees go into that line. We do have part of our fund balance policy that you all have adopted, directs those vacant property fees into a reserve that we can then use to either board the properties up or pursue legal action. So that was sort of why. So we make that transfer at the end of the year. We've got some lower franchise fees, and I think we've got a little bit of a lag in our interest earnings posting, which is contributing to our slight underperformance in revenue from use of money and property. And the last item that fits within that 10. So there are a few transfers that come from one fund balance into the operating account. We just tend to do those at year end. So it's really just a timing issue on the revenue side.
Under the intergovernmental, why was revenue sharing down so much in March versus previous months
It's always based on receipts
from the,
from the one or two prior months.
so like.
It's
could have
probably
been
a January.
December could have been the.
Correct.
Okay.
So it does do this weird cyclical thing. And I will say that while we're talking about revenue sharing, highlight for Wednesday night, the state has adjusted revenue sharing. Not in our favor.
Oh.
Oh,
great.
Yeah, so just saying. We would love to give you things coming attractions. Not bad, but. It's not bad. Could be worse. On the expenditure side, our central services, this will tend to cycle through the end of the year as well. It's based on when items are billed versus when the work is performed. So that tends to be a timing issue. Human resources, we had some vacancies throughout the year. That is part of that, why that is lower this year. Motor pool, that's our fleet maintenance facility. And basically they bill all of the departments on July 1. They bill them for the whole year because you got to pay a certain amount for the fleet. And so it does take some time over the year to catch up. The next area is insurance. That is the same thing. We actually pay all of the insurance out of one account and then we bill back to the airport, the sewer and everything based on, number of employees, value of buildings, et cetera. So we just need to catch that up. Pension and other fringes. The most significant portion that sits in here is our pension obligation bond. And that wire doesn't get issued until May. So there'll be a, I don't know, there'll be a $2 million to $2.2 million charge here coming right up. The transfers, that is the money that the council appropriates on an annual basis to fund capital projects. And we move that July 1 in order to get those projects going. So that is always done earlier. And then lastly, other agencies, the largest portion of that is related to the county tax. And so we pay the county tax every like November or October.
October 31st.
Correct. Because we do have 60 days. They do not charge you interest for 60 days. So we pay it on day 59. Much to their horror. Correct? So I didn't know if there are any other questions on that or if that was,
No questions. Just thank you for
Okay.
doing this.
Okay.
It just helps.
okay. If we can get the
Makes sense.
banker to not have any questions, we're good.
Just Helps to get a sense of what's going on.
Yep. No,
That's great. Thank you.
Anyone else have any other questions?
all right, there's one more item.
Okay, all right, review of the general.
Yeah. So we did include in the packet, the draft balance sheet and income statement and the detail of the fund balance for the June 30, 2024 audit. This is something we did last year as well. The numbers don't typically change. These have been tested. A lot of what we're going back and forth on with them is related to compliance with our federal grants, and ensuring that footnotes and disclosures are all appropriate. I did flip right over to the income statement because it's what I do. If you look, our total revenues, remember this is municipal and school bound together, but the school funds all have to be held separately. So when you look at this Schedule A2 and you see total revenues of 143 million, and 11 million carried forward, that's related to school money for the most part. So what I did was I took a minute to back out the school pieces. And when you back out the school and education revenue from this, our actual revenues exceeded our budget by about $1.2 million. And I understand that sounds like a substantial amount, and 1.2 million is a substantial amount, but it is a 1.3% variance. And I think if any business, if you can be within 1.3% of where you estimate you'll be, you're doing pretty darn well. A couple of the major drivers that put us over is we got more in excise tax than we had thought. And we did obviously increase our excise tax expectation for fiscal year 25. We had some additional commercial trash for about $214,000. We were getting more than anticipated in childcare, fees from our Kids Cave, from our MDEA, and some outside assignments we do either as a provider to waterfront concerts, let's say, or to the airport. So that's most of what was driving the positive revenue variance. On the same side, when you flip over onto the expenses, again, I go to the total expense page here. I backed out education. We were generating about another $2.9 million positive variance on the expenditure side, a little higher than we'd like to see at a 4.5% positive variance. But virtually all of that was tied to 2024, we were still having vacancy issues or greater level of vacancy issues than we're seeing now. And the other part of that is we had not seen a return of the GA claims to historical levels, even though we were budgeting for it. So if you look at our health and community services, you're going to see that, for example, they have a positive variance of $652,000. Well, that is really driven by the fact that we didn't have the claims. On the flip side, you also are missing that revenue from a reimbursement standpoint. So that's part of where all of that comes from. On the last page, you see some large numbers, those related to the transfers to reserves, the 4.5 million that we transferred to the reserve, and then a couple of smaller ones that we can transfer by policy. One of them being the vacant property fees, and the other one being a benefit reserve. And then we included the footnote that lists all of the reserves by account. And that kind of ties back to your budget work that you've been working through as well. I think the last page we included is was the fund balance sufficiency calculation. By charter, we have a goal of being between 8.33 and 16.66% of operating expenses, which equates to 1 to 2 months. So, because you might think, why pick those numbers? That's what it is. I think the other thing to bear in mind is that this number also provides some level of coverage for our schools. So the school department is part of the city, so we actually factor this in. As you heard, the schools up until COVID were limited to not carrying more than 3% of a fund balance. And in tough times, 3% might not be enough. So as a municipal department, they're still part of that. So we do provide some fiscal, support or safety net, if you will, for our schools should something happen from a state and a federal funding perspective.
Yeah, very helpful. This is good. Thank you.
Any questions?
Last year, were we a little bit higher with our fund balance percentage and we
Yes.
allocated it?
Yes.
Where did we put it?
So we moved it into reserves, which is now what you're drawing upon to fund some of your capital items or proposed to be funded in your budget for the coming year.
Okay.
Yeah.
Council Beck?
Yep, just had a question about the, I guess go make the revenue under other in school.
Yep,
Just because the number is so huge compared to what we've ever seen before.
correct.
I mean, how does that number get so big? And it just,
I think it came from COVID, Bunny. I'm not gonna fib, but I can certainly get that from the
Sure.
school department. Yeah.
Any questions? Do you have anything else for us?
Yeah, I tried to be speedy.